Good turnaround Tuesday, Warriors. I'm glad you got it straightened out, Simon. Hi, AJ, Steve. Ingmar, how are you? I believe it is. Mike, how are you? Linda, hello. Hi, Blake, Kman, James, Glenn, Ayaz, Laura, how are you? Ran, Parth, welcome to Face. Okay, so
Hey, hey Dale, just want to say
go ahead.
OPEC is discussing 500,000 barrels a day hike a month over 3 month, and that's from Delegate. And you see crude oil just got pounded about almost $1 just a second ago. Yeah.
Oh, because it had a pretty bad day yesterday. I didn't see,
Yeah.
we were a little lower.
Yeah, that just came out just moments ago. Michael Brown just jumped in our chat room and said that. So yeah.
Okay.
Yeah.
What's interesting about that is you would think that natural gas would be, following it kind of, but look at nat gas. So unless it peaks here, it's kind of got a decent look. If this is, this held 61.8, 78.6, we get through 315, call it an ascending triangle, then you have about 345 or so. Um, okay.
Cool.
So, huh?
I said cool.
Okay. Anyway, yeah. So here's this isn't showing it. I use a USO. Yeah, down a buck. Yeah, and look at what USO did. Tried to one of your favorite things, Blake, false breakout.
Yeah, I
Tried
love that.
and then boom. So let's talk with the guys. So we have Euro up 20, and wondering who thinks it's a sell yet at these levels, or we've only recovered just 38% here. But gosh, cable wasn't even able to rally. Well, it did, but it couldn't even get to 38%. Aussie seems to be the beach ball of the currencies. It acts like a different market. It's, the leader, the relative strength leader, yen. So, Ryan, good morning.
Morning, sir. Are you
All
open or are
right.
you shut down
When's that going to happen?
tonight?
Okay. So what are we thinking? This can be just like everything else that's happening nowadays. It's not going to be like it was before. Okay. So actually, I heard one senator say, who's a Democrat, who's against the shutdown, that this is going to give Trump even more power to do what he wants to do through executive order while the government shut down.
Yep.
Man, yeah, so, militarize people on furlough, just terminate them. Who knows what else?
Yeah,
So go ahead.
I think that's the biggest impact, that he's going to sack a load of people. That's been the rumor. He's going to use it to sack a load of people, which will be on top of everyone he sacked at the beginning of the
Right.
year. So yeah,
Yeah.
that's going to be a mess.
Yeah. So why are people surprised with downward revisions in jobs? Maybe a lot of those were government jobs that they didn't count as fired in the revisions.
Well, we may not know for a couple of months if
Yeah.
because it looks like the BLS and the Labour Department and all the other data is going to be shut down, whereas in the last one some of those weren't. So we're not going to know, and it's going to be one big cluster. You know what?
Yeah.
Because we're supposed to be waiting for those government jobs that he did with Musk in the early
Yeah.
part of the year to drop into this data, which we thought maybe September, but my good friend Michael Brown says that those contracts were coming up at the end of September, so we won't know until the October numbers. So who knows?
Okay.
A lot of people are not dismissing it entirely, but saying that, oh, it's not going to be a big deal. You're going to kick the can. It's going to be just like all the others. I think we just need to be aware of what to do if it's not like all the others. Prepare for the unexpected rather than just brush off that it's going to be a temporary thing.
I'm going to wait for Euro Pound to turn or at least make a new high. I mean, we're struggling against these old highs, just teasing people. There's stops here. Get it over with is what I say. So once we accomplish it, maybe there's a chance for if this tops, that the euro will begin to be the preferred short rather than cable. You doing anything with euro?
Not at the moment with euro. It is banging its head on this 117.50, which is a bit of an old level. You've got your fib in there, but we can't, since the break back below it, we can't get back above it and hold there for any length of time.
Yeah.
So it's becoming a bit of a sticky point for the euro at the moment. And if it can't reclaim that, you're not going to get any higher. And but you never know. Dollar selling is supposed to be the theme of month end. We're on it next month. So, maybe if you get a pop up through this level, it's going to get up to 118. What do you do with it? Is dollar strength over post Fed, or is this just all month end stuff we're seeing, and it will get back to being bought up afterwards? That's what the difficulty about these periods in the month, in the year. You don't know what's real, what's not real.
Well, I'm glad at times, even though I'm misled, it doesn't work all the time, that I have this RSI work to give me an idea. Because if I didn't have this and all I had was a pattern, I wouldn't feel as confident about the fact that I think the dollar has juice left in it. But this RSI reading after this tells me this most likely isn't the high.
Yeah.
So that's why I just, every once in a while, I'll just add to dollar positions as it heads lower.
We had a good discussion on RSI in the chat room this morning.
Oh, yeah?
Yeah.
What'd you talk about?
How people use it, why they use it, who finds it valid, who doesn't find it valid. A good discussion just to nail it all down.
Well, it's helped me a lot the way I use it, and it's screwed me up as well.
Doesn't it all?
Well, I mean, this could end up being a perfect example. You have a confirmed high, and we enter a downtrend for a long time, and then I'm still looking, wow, there's still a confirmed high there. Anyway, that's how that works for me. What?
Yeah, you use it in conjunction with your thoughts and how you view other things. You just don't go, oh, the RSI is 80, I'm going to sell it and shut your eyes.
Yeah, I don't use it for just in fact, I don't use it at all for overbought and oversold. I either use it for confirmation of the trend, which, like when you have this, it says buy a break, when you have something like this. Or if you have something like this, it keeps making new price highs without new momentum highs.
Yeah.
That changes the picture. This was over 70, but lower. Anyway, the metal's taking a rest, Kay. Where are you buying them? Thanks, Brian. Good morning.
Hey, morning, Dale. Talking to me?
Yeah, Kay.
Hey, how are you? How is everybody?
Good, buddy. How are you doing?
Do you know what we talked about yesterday? There's a couple of things happening there, I think. I said, well, it's possible that people are in a rush to buy those metals to honor end of month, and especially perhaps end of quarter contracts, because we have seen that before. But then Ryan raised a very interesting point, is that we are entering Golden Week in China, and usually China is underpinning gold going into their Golden Week. But now all of a sudden it seems that demand, at least it did another $40 in Asian time, and then all of a sudden, as Asia went home, it lost the bid. So I think we are going to have to monitor extremely closely what's happening today in the US market. I am thinking that it's very hard to call a top. This could trade 4,000 next week, of course, but I'm thinking that there is a risk that the demand that we have seen over the past weeks or days has mostly run its course. And again, we will see how the New York close is going today, because if the states stop buying it as well for perhaps reasons of contracts, etc., that being fulfilled now, I'm not excluding to see finally a bit of a deeper retracement on the tip of my toes, but for at least I am not in a hurry to catch a knife if it would start to retrace from here, because it's been going so far so quickly that we could actually see a pretty decent retracement. That's my thinking anyway.
Okay, well, the gold-silver ratio is recovering. Greg said it was a 5, I don't know, here. But I saw, and this to me says it's not a bottom, but, I'll take it. I mean,
Yeah,
look at that.
Yeah, silver also lost a buck in quick succession. So there as well, I'm really very curious what's to happen. Once we are over the quarter end hump. Really, I'm not in a hurry to start buying either one of them right now.
Okay.
First, see how this new month starts.
How about currency-wise?
Currency-wise, I been running back through data and stuff, and we talked about it this morning on the flow show too. Obviously, there's this risk now about the shutdown, and we can't ignore it. But I have the impression that, and I agree with all the models that we should see dollar sellings, but it may be the last rush. Before maybe the dollar getting back some of it. That's what I'm thinking. So I'm trading with the clock next to me, and come 4 p.m. London time, I'm not going to be short dollars anymore if we see this last leg selling also.
Okay. And
I may even counter it if we see a bit of a run up in the euro. Never know to where it can go. It can be 20, 30, 50 pips. We don't know. But to me, it's what matters is what happens on the fixing and especially afterwards.
yen, yeah. This measures, I look at this 8.5. This is 150. So unless that would take us down to 47 on a measured move. If this is a little head and shoulders, whatever, Quasimodo.
Yeah, it's very possible, because there's also some signs now that Koizumi may have more support than Takaichi from the diet members. Also, Golden Week starting in China. So traditionally, although maybe a bit less late of late, we see some yen demand going into Golden Week as well. That may also be the case, and also the end of quarter, where the models are calling for dollar selling globally, but I don't agree on the yen side looking at the equities, but so there as well.
Okay.
It's going to be. I think we could bounce a bit once 4 p.m. is over, but where it's gonna go, I don't know. Maybe the yen is not ready to really weaken much for now, because of those elections upcoming, because of that Golden Week stuff. Bank of Japan, it seems like more and more are hinting at end of October could be bingo for next rate hike.
Okay. Let me go to Ryan for risk. I haven't asked you about S&Ps in a while. What do you think, Ryan? Failing rally here?
It looks like it, because we couldn't get up to that prior high. So it looks like we might, look to be dribbling lower. I think we might get a bit of a confirmation reaction once it's confirmed that we were in a shutdown. But after that, the market's going to get on with itself. It has been 7 years since the last one, so probably a few people have forgotten how it's going to trade. Risk, we still got the Ukraine stuff going on. We might have a solution to the Gaza stuff, which will be, you know, one risk element that you can remove from the price section. So, but you know, this is still going to be, it's still in pullback territory, isn't it? I mean, if you just take the September move, did we even get back to the 38.2? You know, like you were measuring in some of the others. So just for the whole month, is that those lows?
You mean this pull? No, no, I don't think so.
That is the 38% retracement.
Is it
just to the September move? Yeah,
yeah,
just this month, Dale.
Oh, from here.
Yeah.
Okay. All right.
So,
well, you know, this to me is Wile E. Coyote's cliff, ledge. And if we get down there and Wiley's sitting, you know, the road runner's coming and he's on the cliff and it takes it out, you know how fast you lose altitude when you fall off a cliff. And I think that we'll lose some pretty good altitude at you know, first to here and then possibly, you know, to the bottom of the wedge, 62. But, you know, that's saying that we break down. We could also blow to new highs. But I have a feeling that, you know, yesterday's action wasn't so great. I sold some. We'll see what happens. I've taken partial profits on it. But, you know, what was this, 78.6 back? And if it's back to Friday's close right here, 58. So, you know, you look at the daily and I don't know, seems heavy. Here's NASDAQ. And the real point is NASDAQ seems heavy, but what's been leading for the last month has been Russell. Okay. And it's even heavier. Okay. It's had the weakest recovery because, you know, responds, and it should be doing okay with rates coming down, right? That should be the positive here, but the Russell does not look good to me. You know, it could pull back to here. So if the leader is starting to falter, I don't think that's a good sign for the rest of them.
well, this is the big risk with a shutdown because all your data and everything goes out the window. You know, let's say it is a prolonged shutdown. Let's say it lasts for 2 months. The only thing you're going to have telling you that what the economy is doing is private data. That's the PMIs, the ADPs, the challengers, all that sort of stuff. So the market's going to get an impression based on those numbers and what it means for the Fed. And then when we do get the hard data, it could either add to that or it could go completely the other way.
It could be stale by the time we get it.
It could be stale, yeah, but we're not gonna know it. I mean, if we're getting Q4 numbers in March, no one's going to care about it. But it's the whole landscape is going to change in what we're trading. So, you know, you get a PMI, there's no inflation data after that because they're shut down. So you're going to have to rely on what that says. And that can sometimes have differing signals. And as I mentioned on the flow show, you know, end of quarter reporting, you know, Q3 shouldn't obviously be impacted, but Q4 might be, because what if you're a big company who's got government contracts for housing, healthcare, defense, whatever, and you're not getting any money, you're not getting any orders, you know, how's that affect your bottom line?
Okay. Back to Kay. Thanks, Ryan. Where's your head at on yields, brother? So we went to 420, couldn't get through. Do you think we will get through, or this is just a failing rally and rates are going to make new lows here?
Picking up on what Ryan just said, if assuming that you guys go in a shutdown, and the more it will be prolonged, the more uncertainty there is that people are going to get paid, and then well, God forbid we run into year end, your people will need money, and I think the longer it lasts, the longer it's going to be dangerous for the bond market, and yields could actually rise just because of a liquidity problem. But of course, if it's solved after 2 days, so to speak, that is not going to be. And then I think we are going to continue to mooch around in this 430 zone for now, because the data don't tell us that yields should come down.
Yeah.
But is there enough juice for them to go higher? I'm
Well, if
yeah,
you get economic slowdown from firings and people not having money to spend, and I don't know if we can
yields
still
go down.
auction bonds. Can we still auction bonds during a shutdown?
Yeah, oh, the Treasury has said yes, that
Okay.
they will continue. The Treasury
Nothing,
has said,
nothing stops that, huh?
no, nothing stops Bessent. Ah, come on. Bessent is a warrior. Nothing stops him, you know.
Yeah, yeah.
Um, no, but no, but I think, yeah, but that's all. It's always a double-edged sword. But I really think if there's going to be a potential on a prolonged shutdown. First, a liquidity problem, but if it really weighs on economic activity, then once, let's say, the new year starts, the yields could absolutely collapse because if there's no growth anymore,
Yeah,
then obviously
yeah.
there shouldn't be yields shouldn't be higher. But I mean, it's going to be. I think it's going to be very important for the market and the bond market to watch the length of the shutdown because it could create a lot of mayhem in people's end of year books. You know,
What I wonder what Paul's thinking going into the Fed meeting during a shutdown, should it manifest,
I
if
have
that's
no.
gonna if
Yeah,
that's gonna affect his thinking here, that
I mean
maybe
they what can they do?
well they could
Buy bonds
ease ease to
to QE. The
Q
easiest
yeah,
thing is to buy bonds to
okay,
keep a lid on stuff, right?
yeah,
And then you don't have to touch the rates. That's the easiest thing I would say. You stop QT for a while, call it an exceptional measure, and you buy bonds, and just to keep the rates in check if people have difficulties finding liquidity. So that's the easiest thing to do, in my
okay,
opinion. But
all
then,
right.
but there is why would they touch rates? That's creating even a bigger mess, I think.
Yeah, that's going to be an interesting meeting with this going on. Blake, how are you today, buddy?
Well, I'm just trying to get through today as everybody's trying to get through the end of month, end of quarter, and see how much dollar selling's coming in. I mean, we just like for example, we just saw a 25 pip bounce in sterling. I think a lot of this has to do with the end of month. But yeah, I'm just kind of waiting to get through today and to see obviously the government shutdown, everybody's discussing, if we do shut down tonight, everybody's going to be laser focused on the ADP tomorrow. So we'll be covering that live here on the Face show. So just make sure that everybody that's listening in right now, that it will be listening in tomorrow because we will have an instant reaction as we always do when the ADP data comes out. I think you pointed out, Dale, earlier the lower highs in the S&P. You're right. I
Yeah,
think that's about a 78% retracement. There's your 38% retracement of the September move that we were discussing. You can see
yeah,
how important that level of support is.
yeah,
Uh, this market still is very, very resilient. I mean, it's still
yeah,
still strong. I mean, it's unbelievable. But at the same time, you got to be respectful of the fact that the market's just consolidating gains. I mean, that's it. We're not seeing any, significant sell-off. I mean, September usually kicks off a little bit of weakness in equities. That has not been the case this month. I mean, this month,
yeah.
the market's been up. So,
Could we take a look at your S&P longer term with the five waves that you show it completing? Because I have a question about that count. You've been showing it a few times.
yep.
Okay, so this is five. Is this five of five the way you have it here, or just five of this wave?
I think it's of this wave, but at the same
Okay,
time, if you look at it from, this is the COVID lockdown lows, right?
okay,
So
yeah,
this is COVID.
right,
That's, 1, 2, 3, 4, 5 as well.
Yeah.
So, you know, I think you could count it a couple of different ways. Because this is from the 2022 lows, you know, this is 5
Yeah.
waves from, this
Yeah.
is from, so it's somewhere up here. I just don't know where it's at. I mean, I don't know if we're here yet or we extend a little bit further, but I mean, this is a big channel, Dale. I
Yeah.
mean,
Yeah, it is. So
it,
I think people should keep this chart in the back of their mind when they're trading now.
I mean,
Yeah.
I've been waiting to short up here for months, and we got here. I shorted after the
Yeah.
FOMC
Fat.
last
Yeah.
week. Was it last week,
Yeah.
I guess? I'm trying to think how
Hmm.
long ago that was. I guess it was 2 weeks ago. Uh, or a week and a half ago. Anyway, I shorted around these levels. It's not like the trade's gotten away from me. It's
No.
just, you know, we're stalling up here. It's a little nerve-wracking because we're not giving up gains, but at the same time, I think we're at some pretty critical resistance
Oh,
regardless.
thank you,
So
bro.
you're welcome. You know, one of the other things I wanted to discuss, we have, as you and Kman were talking about precious metals. I mean, you look at the gold move, obviously a very, very strong move. This is that wedge that we've been looking at, and we have completed. Well, I mean, we came within, you know, a few points of the wedge completion overnight in gold. We got, I mean, my target was 38.88. We got to
That was a good call.
38.71. So as you like to say, Dale, close enough for government work, right?
Yeah, yeah, especially a government that's shutting down.
Right. Hey, there you go. That's funny. Uh yeah, but we've mentioned that number many a times over the
Yeah,
last month. We basically hit it overnight. I was I was surprised as how aggressive the move has come since, you know, since European trade. You know, since we went to bed, we were still up here, and then, you know, getting up this morning, I was surprised how aggressive that sell-off was. But yeah, silver and gold both look a little dangerous, and we talked about silver coming into really major resistance. And matter of fact, we're going to bring, well, Dale, you're bringing on one of the most bearish silver traders I've ever seen. Mish, she's been just you know, just kidding, Mish, just kidding. No, she's been a major silver bull, but you know, we are up against major resistance, and like I said, with gold completing a wedge pattern, and we're,
parabolic was
yeah, it's a
parabolic.
parabolic. We just completed that wedge pattern. Silver has gone up right into resistance, and we're at month end, quarter end. It's going to be interesting to hear what she has to say in a few minutes about that. Do we have, oh, we have data coming out? I'm sorry. I know
Jolts,
tomorrow's going to be a big day.
jolts
Not,
in 1.5 hours.
yeah, okay. Okay. In a half an hour, we'll have jolts. And that, obviously, with a government shutdown looming, that's going to be data people are going to be paying attention to. So I'm going to really quick, I want to talk to Ryan, and then I'll come back to Kman, because K, you're going to be leaving for a little bit. So we want to, you know, get your thoughts before you head out of town. Ryan, what are you thinking right now as far as the shutdown, and how's it going to affect, you know, the dollar at this point?
Oh, well, dollar's going to be the worst currency in the world. I think everyone should burn it if they shut down. That's what I think. No, but,
All right.
no,
Enough with your sarcasm. What do you think?
yeah, I want to see what the market does with it. You know, it's okay comparing to things 8 years ago, but we're in a different world now.
Yeah.
We need to see how real it is. We need it confirmed. We need to know if we're not going to get data, and then from that point, we're going to know what to do and how we need to react. But yeah, it shouldn't change much. It's just going to make it harder for markets to gather information in how they price the Fed going forward.
Yeah. All right. All right. Very good. K-Man, like I said, you're going to be leaving here for a couple of days, or a
Mm.
little bit longer than that. What are you thinking before you leave here?
Well, I mean, it's has been already talked about so often. It's going to depend on the length of the misery, of course. And then I think the more dangerous one, the longer it lasts, will be probably the bond market for a starter, and then maybe followed closely by equities perhaps, but especially I think the bond market is going to be one to watch if it's a prolonged one. And then for the rest, yeah, short term, as I said, I think if we see the suspected dollar selling and into month quarter end here, watch that 4 p.m. London fixing, because I think it may, at least in the short term, print a bit of a bottom in the dollar if we get those flows.
Got it. All right. Sorry, I'm on the wrong
Have a good trip, Kay.
Thank you
Safe
very much,
journey.
Coach.
Safe journey, man.
Yeah, we're gonna miss you around here, Kay, but we'll be looking for your return soon.
Well,
All right. And Dale, I know we need to pass it over to you so you can talk to the literally the most bullish person I've seen on silver in a long time. She's been super bullish. But before I do that, I just need to mention today at 8 p.m. Eastern, the 50% off funding programs for new traders is going away, and it's 30% off for everybody else. But if you guys are interested in getting funded as a trader, we have the two specials that are ending today. So make sure you go to right to the middle of our website, go to Trader Funding Program. We have a couple of discount codes that are available to you. If you have any questions, you can always come down here and ask our support on how to get started. But that sale ends literally at 8 p.m. Eastern this evening. It's midnight UTC, so make sure you check it out. And let's bring in the most bullish silver bull, Mish. How are you?
I'm good. Can you hear and see me?
Yeah, got both.
Okay, great. Good morning, Blake. Good morning, Dale. Good morning, everyone.
Hi, Amish. Thank you,
Good morning.
Blake.
You're welcome.
Thank you, buddy. So, Mish, why don't we just address also, Blake, you know that Mish is on CNBC now. She's broken into.
Well, let's correct that. Asia.
Asia.
I'm very popular in Asia. Yeah.
Very awesome.
All right, that's still
Yes.
cool. I think you should be international anyway. So your intermarket relation work is great. So I'm interested in what you think shutdown is going to mean to the markets. Do you think, people have looked at it and there's been little impact, but things seem different every day now? Could this be more negative to, just the stability of the markets with this going on and President Trump using it as an excuse to be laying off a lot of people?
Well, I hate to get into the political foray because
yeah, I do too.
Right. I mean, there's reasons why I suggested. I saw today J.D. Vance is now blaming the Democrats. So,
right.
It doesn't matter really. We've been at this crossroads so many times with a government shutdown looming. It's actually happened a couple of times. And as we know, it usually gets resolved. This is a different world, though, we're in right now. So
that's what I mean.
Yeah, I don't know how long it will take to get resolved. It will eventually get resolved, because what we do know is people get people get upset about social injustices and violence and all the other.
I know where you're going. They don't get upset about anything more than money.
Exactly. And once it starts to impact people's wallets, or something horrible happens because, in a state park, there's no rangers or, something like that. And a tourist gets mauled or, whatever it is, we don't really know. But what we do know is obviously, well, one could actually argue that the government has sort of been shut down already. And I have, what
that's a good perspective.
So it's just really more of the same, except exaggerated. And I think what I read that resonated with me was about the paying down the debt when the government is shut down, because that goes away too, in terms of being able to do that. And of course, we know that that's right now screaming is the debt. And
Yeah,
so
yeah.
I think that's where I'm going to focus. I heard, the discussion on bonds, and obviously you have to watch the bonds, not because whether we think the Fed's going to lower rates or not, but really more about how the relationships flip. We've been in a risk-on situation with the
Yeah.
long bonds versus the junk bonds versus the S&P for so
Yeah.
long. And I think that
Eternity.
yeah, eternity, exactly. And so does that change? I mean, at this point, it would have to be something pretty outrageous. So we'll see. We'll see.
Yeah.
There was so many. I love Blake calling me the biggest silver bull. I mean, I've been bullish silver since $20. So here at
Yeah.
$47. Maybe I curtail in terms of the upside in a degree because there is resistance, but longer term, I actually still believe with everything we just talked about that there's almost like a little chaotic underpinning that would where the metals could really react inflationary. And I love my trifecta of inflation. So I think I like to look at it like a trader. So silver gold ratio, right? We're hovering around 80. If that ratio breaks 80, that really means not only silver can continue to go up, doesn't mean gold goes down, but it means that silver starts to accelerate. That's inflationary. The dollar, this bounce that we had in the dollar, I would call it a meager bounce. However, we do legitimately have some level of a double bottom. If we go back to the levels we saw in July and now September, as we're getting into October. But if that low breaks, the dollar will go lower. And thirdly, of course, is my sugar barometer, which is interesting because sugar right now is holding. If you look at March sugar contract, you want to look at it at around 16.35. If it starts to get back over 17 cents, now we're talking about a whole new sea change of a hyperinflation, which would be a normal reaction in essence to tariffs. I mean, now we have tariffs on wood, so that could be inflationary for wood prices. We saw the supply problems we're seeing with copper. Obviously, we know that the precious metals, along with now some of the industrials, platinum and palladium, have gone up. The things that haven't really participated have been a lot of the grain, the agriculturals. But
but do you think that they've begun, Michelle? I was going to ask you about that because corn bottomed a few months ago. It's been a decent rally too. And I know any market can, get a rally out of the hole with short covering and all of that. And the rubber meets the road if we have a correction and we put in a higher low, kind of like what natural gas is trying to do. And you and I talked about that. Yeah. So,
I listened to I read the transcript of your interview with Maggie Lake. And so, I thought that
there it
was
is.
yeah. Well,
So,
yeah, exactly. Well, we're long natural gas. I mean, obviously we always play with stops, so it's not like we sit there to hold forever. But we're talking right. I think two things is one, you have to watch DBA, and that's huge because if it gets back over 27.10, is it because of coffee? Is it because of corn? We don't really know. Is it because of the softs, like I mentioned, sugar? But to me, the big thing that's really holding back a hyperinflation scenario is oil. And I read today, forget about natural gas. That definitely to me looks like it's bottoming out. I don't know where it's going to go. There's a lot of gas that can be released. When I say that, it sounds funny. But when we look at oil, we just had some negative stories for oil. Number one is now OPEC Plus is saying they're going to release 500,000 barrels a day every month. And there's another Trump story because we know that when he went to Saudi Arabia, he shook their hands. Basically, the deal was you keep those oil prices down. So, and I'll do whatever you guys need. I'll send billions of dollars or whatever. I mean, he was very transparent about it. And so if oil stays cheap, that's one thing. If in the face of all this talk of OPEC plus, you talk to somebody like Josh Young, who also was on Maggie's show, he thinks that this is just a house of cards and that demand is much greater. than people anticipate, and supply is not nearly as big as being reported, because the Permian Basin and a lot of other air producers are not producing oil at these low levels. So we'll see. But I can tell you that if you put all those things together, rising gold, rising silver, rising other types of commodities, the tariffs, then grocery prices, even though we're not seeing them in the futures, are at 2025 highs recently. That statistic came out. Consumer confidence going down, the dollar potentially, and anything that ignites geopolitically maybe could be the thing that ignites the oil market. The picture changes.
Exactly. You know, everyone's been talking about a recession and debating because of weak employment numbers. But I learned from Mark Chandler that, and you could probably tell me if you agree, that every major recession starts with an oil shock.
Exactly. And you know, you can have recession and inflation at the same time.
Yeah, that's what
People
we
don't
have.
realize that. I mean, the biggest argument people tell me is that we're going into deflation because we're going into potential recession. And I'm
Yeah.
like, you know, I don't see deflation at this point. And I could make the case potentially for recession based on what you're saying. So that's why we look at our modern family. I love, you know, my segue to the modern family.
Okay, I'd like to see it because we are at an interesting juncture, having made new highs, and I saw you talking about the Russell and the potential triple top. You're warning your subscribers about. I get your emails, Mish, and I
And
read them.
volatility was the one I
Yeah,
wrote
yeah,
yesterday.
yeah. So
That
you must think that there's a chance that even the S&Ps can correct.
And there's always a chance. You know, we know that it's been growth stocks that have really been the big leaders, but we also know that there's been stories there too. Not that there's any doubt in anyone's mind that we're in an AI world, and that will continue to blossom as time goes on. And I could tell you that some of the technology that we're using right now, which I can't really talk about, but it's fresh out of the box. And it has to do with Google. So Google is really at the forefront in terms of AI when it comes to multimedia. The whole film and movie industry is changing. All people that are making movies right now, if they don't go to AI, they're left behind. And Google's at the top of creating the technology for that, for the software for that. So just want to mention, I'm not bearish AI, but with that said, you know, what I heard it suggested that all these announcements like Nvidia and Intel and Advanced Micro
Yeah,
Devices.
giving each other money. I think it's happened before, right?
Yeah, exactly. And that is not new revenue. That's money being circulated. So, so you know,
Yeah, it's crazy.
it's a different story than what we
Yeah,
saw before, where revenues were just increasing and increasing and increasing.
yeah,
So I don't know, but let's look at the modern family. How about we do that? I
yeah.
always
Let's do that. So
you know it's
the bottom of the screen is a green share.
it's interesting because you know, when you and I have talked for, oh my God, so many years, and I always feel so relaxed when I come on the show. And I was actually a little nervous this morning, and I realized it's not me nervous about what I'm going to say. I'm just nervous right now. I think there's an anxiety that has to be recognized. And speculators have come in like gangbusters. I think I read mom and pop retail investors have donated $23 billion into the markets right now. So you've got a lot of people that are
All in, all in.
comfortably numb, comfortably numb.
Love that tune.
Yeah, yeah, right. So should I share my screen?
Yeah, go ahead. It's a little
Okay.
green button. And you know what, Mish, I appreciate you sharing that feeling because, you know, we're all supposed to be at times, oh, everything's okay. I have faith. You know, I know everything's going to turn out okay. It's all good. And I have the same feeling. It's like this undertone of anxiety, being bombarded by things that we're not used to. And
We're not
Good.
used to, right? I mean, and I don't
Yeah.
even want to get in, I mean, let's just say the closest thing to home for us is, when you hear about the mass shootings. It's so hard as a human being to not have a level of compassion
Yeah.
for the families of people that are impacted by that. And it's too much. But and that makes me nervous.
All right, I'll get political. There are too many guns in America.
Well,
Okay, I'm political. All
right,
right.
I saw a chart yesterday of gun deaths so far this year, and the United States was like, some countries were zero,
They
and
don't have guns.
they don't have guns, right? So gun control actually there is a correlation, but I don't want to go into that
I
thing.
know. Yeah,
Right.
people want to hunt.
Right, because
They're not. Don't hunt people.
well, the thing is I also know a lot of very liberal people. I try to stay very much in the middle because you can't be a traitor and have a major bent one way or another. But I know very many political left-leaning people who are also buying guns for different reasons. So,
Yeah,
whatever.
I know. Okay.
These are the things that make me nervous, make me
Okay.
lose sleep tonight. All right, but let's go to the charts. So this is grandpa, right? So this is a daily chart right now. And you can see, we made a new high over here. We did have a reversal in that when you make a new all-time high, and then the next day you close below the low of the day you made the high, that's considered to be a reversal. And so in that reversal, generally you look at something at about 5 to 10% in terms of a normal correction. So if that was, let's call it 247, a 10% would be $25, which would put us really basically right near or maybe even under the 50-day moving average. That's kind of the worst case, but we don't know that yet. But if we look at the weekly chart, what I found so interesting is that we have first week, second week, third week, 4 weeks in a row where we made slightly higher lows. And so if you look at the low of last week, 237.55, just from a pure technical standpoint, anticipating a correction, I think would be if we break down under this 237.55, that's where we could start looking at what I was talking about at around 225 as a first initial target, which would be a 10% correction from the high, which actually would be kind of a normal correction.
Yeah, be healthy.
It would be healthy. Anything beyond that, not so healthy. So before I jump around to the rest, here's the one that actually I think is so interesting because nobody thinks about this. This is KRE. So, you can
the
see
banks.
the banks and commercial real estate tied to these banks, right?
Yeah.
So we hear a lot about home prices and housing and prices being too expensive and mortgage rates still being too high. But I haven't heard a lot of buzz about the commercial real estate. So when I looked at KRE on a daily basis, look where it's sitting, right on the 50-day moving average. And if you go back March 2023, KRE was sort of the silent killer in that it rolled over and broke down before everything else did. And then we had that massive correction. It was like about a 20% correction. Whether it turned out to be a great buy opportunity at this point is irrelevant. What is more relevant is that I always say to people, if you listen to the young traders, they're telling you, you just keep buying the dip, you just keep buying the deep, don't worry about a 20% correction, and market always goes back up. But a lot of people can't afford to take a 20, 30, or 40% hit to their portfolio. So my warning to people is, if you start to see these things roll over, you have to anticipate there'll be a much bigger correction. And it's perfectly okay, especially in this universe where it's so easy to buy and sell stocks at a whim, to take some profit or put in some stops, sit through it, and then get back in. I mean, that's been my formula for my entire life, basically, of trading. So keep an eye on this. Doesn't mean it's going to happen, but you can see how close we are right here. It doesn't look so negative, but if you go down here, not only is it massively underperforming the SPY, but momentum is still okay. So this is not like, oh my God, doom and gloom. This is just, hey, keep your eyes open, right? And then the retail's another one. Even though everybody was celebrating Granny Retail's new highs for the year, In 2021, the high in XRT, which I love because of the consumer discretionary and staples, was 104. So while S&P and NASDAQ and all these other areas have gone to new all-time highs, the consumer is in the game, but I wouldn't exactly call thriving in the game. So again, underperforming the SPY, momentum is still okay, pretty far from the 50. But, just watch for rollovers in these inside sectors. And since we're talking inside sectors, let's look at IYT, because I read
transports.
Yeah, freight has been down a lot, 12.5% year over year in terms of freight traffic. IYT is not really reflecting it, probably because of stocks like Uber. By the way, we used Uber Eats for the first time ever last night, which was pretty awesome. But we haven't gotten through the July high. We're just about trying to match last week's high yesterday, but now, of course, I think everything's coming in lower. So all of these things, but it is outperforming the SPY. So this is probably the most positive thing. If transportation keeps going, you can't get too negative, because it basically would tell me that the reshoring is working to a degree and that things are moving in the United States. But, that's just a suggestion, because we need other evidence besides this. And of course, let's look at sister semiconductors.
Yeah.
Now, this could be, we've seen these before a million times. We've talked about topping action. This could be topping action yesterday. I haven't seen where it's coming in right now this morning. But again, you want to watch for some kind of a close today under yesterday's low, 322.47. Remember that 5 to 10% formula that I told you about with the Russells of a correction. And just be prepared, which means you're not buying up here. You're waiting, maybe protecting yourself, maybe putting in stops. So that's kind of how I'm looking at the big macro right here as extended. We have fundamentals that could support a correction. If it happens, don't ignore it. That's all. 5-10% healthy. Beyond that, now it could hurt.
Are you addressing traders or investors?
Oh,
both. Okay, so I mean, investors too can be thinking about protecting themselves from what the market isn't expecting.
absolutely. I know that, like I said, I always like to use NVIDIA as the classic. When NVIDIA was trading over 200, everybody was piling in. When it went to 180, they were saying buy the dip. Then it went to 160, buy the dip. And then it went all the way down to like
90.
140, and then 90. And I'm thinking to myself, these people are now down 50, 60% in their portfolio. Did that feel good? Long-term investors. Now, of course, we can say, oh, well, NVIDIA is back up to 180. It wasn't so bad. But, what if the one day that doesn't happen? Or it takes a year for it to happen? That's why I like to, I care. So,
Yeah.
I mean, we have always been more active investors. There are times when I can kick myself that I didn't buy something and hold it forever. And then there are times where I say, thank God I didn't. So to me, I rather just get back into something. So that's just me. So I think that's the fair warning. But let's take a look at some commodities too.
You can't expect perfection at the crap table.
Exactly. And you don't want this to be a crap table. So here's some of the futures numbers coming in right now. You can see the market barely down, right?
Yeah.
So the VIX is up, though. That's sort of double bottomed a little bit. So here's your dollar down slightly. Oil obviously getting a little bit of a hit here this morning because of this massive story about OPEC plus, and also peace in the Middle East. We could certainly argue how sustainable that is. But natural gas is looking pretty good this morning. And, let's look at gold. I mean, there's been a lot of people trying to pick a top in gold. And it's very hard to pick a top in gold. But you can see, if you look at the gold chart here, this is the December contract. If this, again, turns out to be, I was looking at 3,800 to 4,000. So I'm happy. I have my trailing stops. If this turns out to be some kind of a correction, where would it go? I think if it can get anywhere near 3,650 to 3,700, that's a gift at this point in this volatile time. So that's one thing. And if we go down to silver, you know, 47, I was looking at like 45, so it even surpassed my target, which is why I don't get out. I just use more trailing stops. But you see how yesterday it made a high and then, I mean, 2 days ago it made a high and then yesterday it closed. Well, this is today actually. It's starting to take out the low of yesterday being 46.27. A close under 46.27 again. Maybe we could go back down to 42.50, 43. You know,
Sure.
that doesn't mean the bull is over. It just means, like everything else, and commodities are volatile. These are not companies. These are commodities. It could have a correction, but unless the fundamentals seriously change, I think that that's still a long-term bull. Like I said, though, I'm a trader, not necessarily a buy and holder, although I have been a buy and holder in silver and gold for a long time, and that's worked out great. So yeah, I mean, that's kind of where I'm at with all of that. You know, I wanted to show you sugar because it's unchanged right now. So even silver and gold going down doesn't bother me. What matters to me more is the silver to gold ratio, as we talked about. And I said the dollar, obviously breaking the lows would not be good. Here's the sugar chart. So here we are. We had a nice little bottoming here, but it wasn't really confirmed. It's not a strong bottoming formation because the next day, I like to see a close above the high of the day before. That didn't happen, but it doesn't necessarily mean anything. Right now, we're having inside yesterday's range, and I think so the sugar market could be interesting to keep an eye on. That's another one. So if that gets through the 50-day moving average, looks like 1677. We've been there before, but again, a couple of closes above, I would take another probe potentially. You know, I'm looking at that. And if we go back to
You'd have some real nice divergence between those two lows.
exactly. And if we go back to my charts here and go up, and we look at DBA, that's what I wanted to show. You know, DBA has been kind of a very volatile stock, or I should say ETF. But you can also see that we have a golden cross. The prices are sitting right on it. The momentum is sitting right on the 50 as well. Not great momentum. But if we get through these levels, I'm looking at like 2710. If we get through 2710, you got a really cheap risk down to under the moving averages to see maybe that makes a move. And the other one that's been consolidating forever, even though oil is a factor in this, is DBC. I don't know if it's really going to do too much here. Let's look at a weekly chart on DBC. If we look at the weekly chart, you can see the massive level of consolidation really between 21 and 24. So that's another range to keep an eye on right there. And that's actually, you know, momentum-wise, not doing unbelievable, but okay. Been underperforming the SPY for a while. So, you know, these are the things that I'm watching right now. I think you need to have about 15-20% in cash right here just to be
how about cannabis? That's a commodity.
Oh, yeah. Well, you know.
And that's been acting great.
What have we said, Dale? I know you and I have talked about this. It wasn't a question of if, it was a question of when, and when is happening. You know, he supposedly talked about that video about the cannabinoids in your system. You know, I've been taking CBD oil every day as a vitamin forever. You know, for somebody like me, I can't live without my cannabinoids in terms of I'm not talking THC, I'm talking CBD.
Yeah, right.
I do believe it's very, very healthy, especially as you get older. And here we are, you know, we're not quite where we could be, but if he makes any kind of announcement, we'll get there. We look at the history of MSOS. If you go back to 2021, it was trading up here at 56 and it's at 5. I mean, that just show you how much upside this thing has.
Yeah. I'm glad we wrapped on that.
Yeah.
It was a buzz. You know what? It was a buzz talking to you today, Mish.
It was a buzz. Hey, listen, if everybody was stoned, we'd probably have a nice
I don't see a lot of those people going out and getting into fights.
Well, you know what, Robin Williams had the classic line about everybody building the atomic bombs, but the Jamaicans are building the atomic bongs. And, you know, I always thought that was the funniest routine, basically, like how chill everybody was.
Yeah. Well, I mean, you gave us so many great looks and ideas today, Mish. And, you know, it's always great to know what you're thinking and kind of line it up with some of the things that I'm looking at. And, I think that you're one of the better, not just an analyst. It's easy to make a market call. You're a trader. So you make the call, you make the trade, and the hardest part is having the hold to be able to hold.
Right. And a lot of
And
people,
you're able to do it. It's not easy.
it's not easy. And, this is one of my little pet peeves is a lot of people who go on media and talk about, it's the same stocks over and over. I mean, there's a list of 10 growth stocks that everybody has been pushing. And some of them have skin in the game, but a lot of them do not. And I actually have always had skin in the game. And so this is my career. So, I know what it feels like to watch your equity go down a lot. And in the beginning of the year, I had a rough start and I've come back tremendously. But now, forget it. I am like into super tight. I'm not letting my equity go back down again more than the normal fluctuation because it hurt. And I'd rather sit out and be in cash and relax and get in. We kind of know when it's time to get back in because you start to see the bottoming signs, the volume, the reversals and patterns, all of that. Like, for example, here I shut off my chart, but when MSOS bottomed back in April, like everything else, it tried that bottom again, never happened, and then boom. I mean, it's not obviously done what other stocks have done, but this is something now that we know is probably going to go much higher.
Yeah. So, it's a great story. I tell people that, when people come in, they say, well, they're searching for the secret for trading. And there is no secret. It's hard work. And like even throughout your career, you go through periods you have to live through adversity and then be resilient.
You can't possibly become a better trader if you don't learn how to lose money, but you have to learn how to lose money in a controlled fashion. And this year, a lot of people feel very smart because all you had to do was buy the hot stock that X was touting and you make money. It was like easy money, but we know that doesn't always last. And I think the last thing I really want to say is, the idea of the super cycle in commodities, we already have seen it in the metals, is a very real possibility. We can talk about the fundamental reasons again, but we don't have to. But that's kind of where I have my eyes right now. And like I said, oil might be the X factor, but we'll see how long that lasts.
And Mish recognizes it because you cut your teeth and began your career in a similar environment. So it's like deja vu on steroids, isn't it?
Yeah, well, when I was on CNBC the other night, the one of the anchors was like, I remember in October 1987, when we had the crash. I was, I think she was British. I was in high school, and I was, the teacher came in and said, "Oh, Wall Street's crashing," and I thought, "Oh, what's the pop chart on the that pop song that's on the charts?" And I'm like, I was actually, and I said to them on CNBC, I was on the floor on October 1987. I remember it well. Now, of course, it turned out to be a great buy opportunity like they usually are. The question is how many people are wiped out along the way.
I left my office and went to the went to the bank to see if it was still open, Mish. They laughed at me. Anyway, okay. Anyway, follow Mish at Market Minute on X, and you want to show your website so people know. And you could at the minimum you could sign up for to check it out and then go through her paywall. But she's one of you're listening to a veteran and someone that has you're still standing after all this time and doing okay.
Right. And I'm still, I mean, I won't do this forever, but I'm still very active. This is the website. I'm still very, very active in terms of teaching and talking. That's not going to last forever, but I absolutely feel passionate about trying to help people. I mean, here was my article yesterday that wrote, is it time to watch volatility? Like, duh. So, yeah, I mean, at this point, I'm still committed to helping people in the traditional way. And so might as well take advantage of it while I'm still doing it.
You know, you're also a watchman for a lot of people. So they, you know, some of the things that you say and make people aware of are not trade specific, but you speak to the environment we're in, and you have to have been through several different environments to recognize it. So thanks for being a watchman for all of us on FinTwit, Mish.
Oh, thank you, dear. Thank you so much. And thank you. You've always been such a great friend and supporter, and Blake. So I
Yeah.
really appreciate that so much. Thank you.
All right, love you, Mish. Follow her. Follow her on X. She's one
All
of the
right.
best intermarket relationship people I know. And don't just count your charts, count your blessings. And I'll see everyone tomorrow. There you go. Adios, everyone. Thanks again, Mish.
Thank you so much.